Welcome back to Global Lens. The global economy is on tenterhooks over US President Donald Trump and his tariff policies. The delays and reversals in the imposition of tariffs does offer a temporary relief to America's trading partners, but the uncertainty around it is weighing on economies and companies worldwide, with billions at stake. Most of its trading partners are racing to the White House to strike a deal. Trump administration has set 1st August as the deadline. Now, as per JP Morgan, while the larger impact of the US trade war will be felt by the United States, rest of the world will not be insulated. JP Morgan says Trump's tariff could reduce the global GDP by 1%. Joining us to take this discussion forward is Alex Muscatelli, Director, Economics Group, Fitch Ratings. Alex, thank you very much for joining us. How do you think Trump's tariff strategy is going to impact the US economic growth this fiscal?
Thank you. Thank you for the invitation. Well, we just published our global economic outlook for June, and there I think we have two key messages. Is that on one hand, the de-escalation in trade tensions that you talked about since the April hikes and the sharp rise in tariffs that we saw in April. And especially with the de-escalation between the US and China has brought about in our forecasts in an upward revision compared to April, compared to the global economic outlook that we published just before the middle of April. And there we were thinking that the global economy would grow at a growth rate of less than 2%. This year, and so which is really a historical low, lowest probably since the global financial crisis. But in the June global economic outlook, in our latest forecast, we have revised up that growth rate. We revised it up by 0.3 percentage point to 2.2% for this year and 2.2% for next year. So, and the environment that we're looking at is one that you have described, that is a de-escalation compared to April, but at the same time, a sharp slowdown in the pace of a global economic activity compared to last year. And this sharp slowdown is in large part due to US tariffs and to the increase in US tariffs.
Right. I would also like to ask you about how do you factor in the US-Canada trade war that we are now seeing? And US has now also imposed tariffs on almost 25 other nations. On countries like Brazil, he has imposed a tariff of 50%. Canada, he is threatening to impose a tariff of 35%. How would you factor this in your analysis?
Right. I can tell you how we factored in for our published forecast. And essentially, what we are assuming now is an environment of tariffs quite similar to the ones that we had back in March. And so overall, we are looking at an effective tariff rate for the US, that is the average tariff across all goods in all countries of around 17%. And this breaks down into a tariff rate of around 40% on China, 15% on the EU, 15% on the rest of the world, and lower rates for Canada and Mexico. Now, the tariff rates that you were just talking about, yes, they have been advertised by President Trump. They could come into place for some sectors of the economy, some parts of the economy. There is some scope for countries to negotiate and negotiate down these headline tariff rates. So for the moment, we are assuming an overall tariff rate of, on average, around 17-18%. What this does, what the impact it does, and this is based on our model-based estimates on that we've done in the past few months. They're not that different to the ones you mentioned earlier, and we think that a tariff rate on average of the ones like the one I just described would be consistent with the level of GDP in the world economy to be around 1% lower than it would be otherwise in a context of no protectionism.
Right. That's why do you feel that stock markets around the world, while they will be impacted by these tariffs, they will be able to absorb the sentiment and move on, considering not much has changed since March this year, and a lot of this is being negotiated and reversed. So do you think the stock markets will be able to brush off these tariff threats?
Well, we don't really we don't forecast share levels or share prices, and on average, you would expect that over periods of time, share prices tend to go up over time in sort of normal circumstances. However, I think the precedent that we saw in April and May is quite important. That is, we had a lot of financial market volatility after the announcements on April the 2nd, and that brought about a moderation, a pullback, a rolling back from the US, more time dedicated to negotiations. So I think that the stock markets are thinking that this will be a repeat of April and May. That is very, very bellicose pronouncements, followed by lower actual tariff rates.
Right. Would there be certain sectors which you expect to be impacted more than others?
Well, of course, we are already seeing this, right? We're already seeing this in aluminium, in steel, in auto, in pharma, and potentially in pharma, not yet, but potentially also in pharma. We had some announcements on copper. Now, I think what will happen is that specific countries whose exports, or specific trading areas whose exports are heavily reliant on some of those sectors, will try to negotiate carve-outs. We've seen that although for Canada and Mexico we've had strong rises in tariffs, we've also had exemptions for imports under the USMCA trade agreement. So the combination of sectoral, I would say that the combination of sectoral tariffs and headline tariffs can be confusing, but it could be a way for the US to introduce more restrictive measures going forward. We shall have to see.
Right. I would also like to ask you about India. How do you think India is going to be faring in these trade wars, and also as a result of US-China tensions?
Well, I think we've got a bit of a mix here, because on one hand, the fact that we haven't had an announcement on a trade agreement between India and the US yet, I think points in the direction of a challenging negotiation, and some important points of disagreement that would need to be addressed to get an agreement. At the same time, India could be placed as a beneficiary of heightened trade barriers and heightened trade restrictions between the US and China. India could be one of the countries, along with the countries in Southeast Asia, that could benefit from trade diversion. Overall, given the makeup of the Indian economy, given the size of the domestic economy in India, external factors and rising US protectionism would not have such a big impact as it would have in other countries, which are more open and more exposed. So what we are looking at for India, following a strong performance in the last quarter of financial year 24-25, we're looking at a relatively stable pattern of growth of 6.5% of GDP growth for financial year 26, 6.3% for financial year 27. And this is in the context of inflation staying quite low and the RBI having cut rates, cutting also liquidity reserve requirements to enhance liquidity. There is the scope through looser financial conditions for domestic demand, especially capital spending, to pick up. And we do see domestic demand as the main driver of growth in India over the years ahead.
All right. Alex, thank you so much for joining us on the program, giving us your overview on how this trade war will impact global growth and how does India stand to benefit or lose as a result of these geopolitical tensions. Thank you once again for being here with a view on how Fitch Ratings sees the global situation.
Thank you and good evening.
Let's move on. Here's a look at trending stories around the world. The first ever Birkin bag designed by French luxury brand Hermes for Jane Birkin has sold for $10 million at Sotheby's auction in Paris. A fierce telephone bidding war drove the price to $10 million. The iconic handbag exceeded expectations, setting a new benchmark in the world of luxury collectibles. Indian astronaut Group Captain Shubhranshu Shukla, who is part of the Axiom 4 mission at the International Space Station, is expected to undock from the orbiting laboratory on the 14th of July. The 3 other crew members of the mission will also return with Shukla. During the stay at the International Space Station, the AX4 research complement included around 60 scientific studies and activities representing G31 countries. On Final Cut today, we leave you with visuals from Spain's San Fermin Festival, where 5 people were injured after the bulls charged towards the crowd. It's the annual event in Spain where thousands of tourists come from all over the world to run alongside locals over 7 days during summers. That's all on tonight's Global Lens. Thank you for watching. Goodbye. Hello and welcome to Global Lens. Over the next 30 minutes, we put the spotlight on all the top stories from around the world. I'm Parikshit Luthra. These are the top global headlines we are tracking. US President Trump threatens a 35% tariff on Canada from the 1st of August. Also says he plans to impose 15 to 20% tariffs on remaining countries who are yet to receive any letters. 23 nations have received tariff letters so far. UK and Vietnam have signed a trade deal framework. The suspense over Tesla's India entry set to end next week. The Mumbai showroom will open on the 15th of July. Timelines and bookings and sales to be announced shortly. Israel intensifies bombings in Gaza amid widespread reports of hunger and starvation. At least 15 people, including 10 children, killed in an Israeli strike as they queued outside a medical point for treatment. More than 57,700 people have been killed in Gaza since the war began 21 months ago. Straight to the day's global market action. Asian markets ended mixed amid Trump's latest tariff salvo. Korea's Kospi and Japan's Nikkei fell, while China's Shanghai and Hong Kong's Hang Seng ended in the green. There was no respite on Dalal Street, with Nifty and Sensex ending nearly 1% lower. Markets across Europe also tumbled as the EU awaits a tariff letter from the White House. US markets opened on a cautious note. Our top story this evening: US President Donald Trump has stepped up his tariff assault in the latest move. Trump has said that he would impose a 35% tariff on Canada starting next month. The tariff is an increase from the current 25% tariff that US has already imposed on Canada. That's not all. He has also said that he would impose blanket tariffs of 15 to 20% on most other trading partners. In a post on X, the Canadian Prime Minister said that the government would continue to defend Canadian workers and businesses in its negotiation with the US. Trump in his letter hit out at Canada for the flow of fentanyl from Canada, as well as the country's tariff and non-tariff trade barriers that hurt US dairy farmers and others. Now, this comes in addition to the over 20 letters that have already been sent by Trump to various nations around the world and his steep tariffs on copper, pharma and other sectors. In a post on Truth Social, US President Donald Trump said, and I quote, "Tariffs are making our country boom. Many new factories, jobs and trillions of dollars in investment are pouring into the US," end of quote. Joining me now to discuss this further is Carlos Gutierrez, former U.S. Commerce Secretary. Thank you so much, sir, for joining us on the program. Let me begin by asking you, how would you explain Donald Trump's politics this time? Even in his first term, he was very hard in terms of trade negotiations. But this time, he seems to be going against everyone, friend and foe alike.
Well, thank you. Thanks for having me. Good to be here. You know, he believes that the U.S. is essentially getting ripped off. So if you start out with that premise, then you can see why he's so aggressive. These recent tariffs, Canada, for example, it just says that there's a lot of pressure to get some deals done before August 1. And as these tariffs come on, what it tells me is that Canada is either not cooperating or being difficult or being a tough negotiator themselves. So it's a way of pressuring to be able to get something done on August 1. And that's the big pressure right now. Over the next 20 days, the U.S. has to complete, if not complete, we have to complete some frameworks, some call it term sheets for trade, because there's no way we would finish the complete agreement. But that's the pressure. And Canada's one, and there's so many others, European Union, India's one, Japan, Korea. So the next 20 days will be fascinating. A lot of news, a lot of focus on trade.
Right. Do you also feel that the reason why the deadline was extended to the 1st of August from the 9th of July, and considering why Donald Trump is now increasing and stepping up tariff pressure on everyone, is this because he's not getting the political victory that he wants?
Yeah, you know, there are a couple of things. One is it's a very ambitious negotiation, and we're negotiating with probably 12 countries, which just, you know, it puts pressure on our bandwidth. And then the president is going after the toughest issues. So this is not a negotiation that is designed to move the ball forward. You know, he wants to fix the trade deficits. So, you know, in the case of India, he's going after $45 billion of deficit. And that invariably leads him towards the most sensitive issues. So, you know, for each country, this is getting at the heart of their strategic economic policy. And that's what makes it so difficult. So all these new tariffs and the pressure on August 1 is designed to get some agreements. But these will not be, you know, totally flushed out trade deals. There'll be agreements in principle. But I think he wants enough to be able to announce that there's an agreement in principle.
Right. What do you think Donald Trump wants from India? India has offered a very far-reaching deal, but at the same time, we've made it clear, and you know, Mr. Gutierrez, you also know India's stand on agriculture and dairy. We don't give that concession, keeping in mind sensitivities of our farmers, of our dairy industry, of our people. Where do you think things will eventually land with India?
Well, I think to start with, the relationship is good. It's strong. President Trump and Prime Minister Modi have hit it off. And, you know, there's a lot at stake. And I don't think any side takes that lightly. I think there's a great deal of respect for the relationship. So the desire is to get something done. As you say, the difficult part here is that in order to bring down that deficit of, you know, $45 billion, it's going to require some difficult choices from India. Agriculture, which, as we know, is just incredibly politically sensitive. Then there's also the PLI, the production incentive, which India doesn't want to give up on. They don't want to change. Potentially oil and gas, potentially military weapons, but all those items will require a strategic choice on India's part. If it's military weapons, then they'll have to deal with their reliance on Russia and France, and that will be a diplomatic situation. If it's weaponry, Russia is a big part of it as well. If it, oil and gas are also commitments with Qatar. So all of these will require a difficult choice, and that's what makes this so sensitive. But I believe that because both sides want to get something done, and there's a lot more at stake here than just the trade. There's the Quad, and the fact that the U.S. that President Trump offered Prime Minister Modi sales of the F-35, that's a big deal. So no one wants to backtrack. So I think there is a positive commitment to getting something done, but it will require some tough choices on India's part. This is probably a combination of a lot of things and not just one big silver bullet.
Right. You're right. It's not just about trade negotiations. There are larger strategic choices that U.S. is wanting India to move or wanting India to make. Let me also ask you about copper tariffs. Now, the U.S. has said 50% tariffs on copper imports will take effect on the 1st of August. Now, U.S. consumers, according to some reports, will end up paying $15,000 per metric ton for copper, while the rest of the world pays around $10,000 by the 1st of August. How do you think this will end up hurting the U.S. industry?
Well, the copper decision is a big one. And I was surprised that it was so aggressive, the 50%. Copper is, 45% of the copper in the U.S. is imported. To start getting production up, just almost on a tactical level, is we need till 2027, 28. But to really gear up production in the U.S., that has to be mining investments. And we're talking many, many years. So there'll be a gap where prices will increase, potentially we'll have shortages. And I'm not sure how the president's thinking about addressing that. But there has to be a way, because if not, it will backfire. And in terms of using this with some of the reciprocal negotiations, yes, Canada exports copper to the U.S., but the big player is Chile. And Chile isn't really part of these reciprocal negotiations right now. So copper is one to watch. And I think it's one that it should be strategic in the president's mind, because I don't think it will serve for these short-term negotiations.
Right. Do you think President Trump's tariff policies will actually bring back manufacturing to the U.S., considering companies take a very long-term view, and be it Apple or be it any other industry for that matter, getting back manufacturing could substantially increase costs for American consumers. Companies have to make business choices, economic choices. Can he actually force companies basis these tariff policies?
Yeah, that's the big question. And of course, the answer will be seen over years. It's not going to be seen next year. There are some examples to point to that are short term. Some automobile manufacturing is coming back, but that's a relatively small scale. There's a bigger chance to do this on new industries, potentially semiconductor, some of the very high tech. Automobile, we'd be bringing back capacity that went overseas a long time ago. And whether the industry can withstand the cost increases and the price increases will be the key challenge. But we will see this over time. It will not be proven out in the short term. I think what the president wants is to have examples that prove that the U.S. is going in the right direction. So some of the automobile, General Motors bringing back some cars, that has helped announce it. It's helped provide some hope that this will work over the long term. I'm sure there will be some announcements on steel. So a lot of this will be conceptual, anecdotal, until many years from now when we're able to see if it actually worked out. Now, what you're saying is very important. This is If a company is going to reinvest in capital in the U.S., then there should be some certainty that these tariffs are going to stay on for a long time. But there is no certainty. And, a future administration could decide to take them off. And that's what makes the decision so difficult for companies.
That's right. In fact, there is no guarantee whether the future administrations, it could be a Democrat, it could be another Republican candidate, and whether they would like to follow through with these policies. I would like to ask you about Tesla's India entry. Now, this was being speculated, explored by Elon Musk for a very long time. Now, Tesla's finally entering India. 15th of July, they're opening their first experience center. They're beginning sales operations from India's financial capital, Mr. Gutierrez. How do you see Tesla's India entry at a time when they are under stress in terms of sales, market share in China, in Europe?
That's a great point. I think it shows Tesla's commitment to India, and it shows also India's standing in the world of commerce and business. Tesla will have to pay tariffs. I don't think the cars are coming from the U.S. Even if a deal is done on tariffs with the U.S., my understanding is that the cars would come from China, and China won't be part of this agreement to lower tariffs. So it does show that Tesla has a long-term strategic commitment to India. Perhaps they're willing to sacrifice profits in the short term, build some manufacturing over the next several years. But it's a very good sign. It does show that there is commitment on Tesla's behalf for India. So it's a good signal.
How do you also see this at a time when when Donald Trump and Elon Musk are at a warpath and are at loggerheads with each other? He has been asking Apple to manufacture in USA for USA. And at this time, you've got Tesla saying, I'm going to start sales operations in India.
Well, the interesting thing about Tesla is that they are the car manufacturer that produces the most in the U.S. So all of Tesla's U.S. sales are manufactured in the U.S. So from that standpoint, they're pretty well covered. I'm not sure that their entry into India will impact negotiations. Will be an opportunity for Trump to push back on Musk and Tesla. I think that will come in the political arena, and that's where Musk is taking a big risk. Is he's not only a billionaire businessman who wants to be even more successful. He is a billionaire businessman who is also deep into politics. And that's going to be the rub. And for Tesla shareholders and the Tesla board, of course, that's what they have to deal with. It's now a political consideration for people to invest in Tesla. And that's a problem. So, that just muddies up the water. But Elon Musk is not going away. It's not in his nature. He's going to continue with his New America Party. And he's going to continue building Tesla and building his total organizations, the Boring Company, SpaceX. That's who he is, and he's going to continue pushing forward. And there's no doubt this will be quite a drama over the next several years. But Musk is not going away. He's determined, and that's who he is.
Right. He's the man to watch out for over the next few years, definitely. Mr. Gutierrez, thank you so much for joining us here on Global Lens. All right, let's move on. Time to take a look at all the other news from around the world. American EV giant Tesla is set to make its entry into India next week. The firm's Mumbai showroom will open on the 15th of July. Timelines and bookings and sales will be announced very soon. Moving on to the crypto markets, where Bitcoin has touched a new all-time high of $118,000. This on the back of strong institutional demand and inflows into crypto ETFs. The surge triggered the liquidation of over $1 billion of short contracts. Israel intensifies bombings in Gaza amid widespread reports of hunger and starvation. At least 15 people, including 10 children, killed in an Israeli strike as they queued outside a medical point for treatment. More than 57,700 people have been killed in Gaza since the war began 21 months ago. 9 bus passengers were killed in Balochistan in Pakistan. The incident occurred when armed assailants kidnapped them from multiple buses. The bus was traveling from Balochistan to central Punjab. The travelers were reportedly targeted because of their Punjabi ethnicity. Pakistan's Prime Minister and Interior Minister acknowledged the incident and vehemently condemned the killings. Coming up, how should countries navigate trade uncertainties and US tariff threats? Will Trump's tariffs lead to new economic alliances? We find out on the other side. Stay tuned.